Hello, all you lovely people. It's Kate Hill here. How are you all going? I am bringing you, as always, the best unbiased and honest content on property, along with fantastic hints and tips. Today, stay tuned for all your latest property news. According to PropTrack, national home prices have increased for 6 consecutive months, rising by a further 0.3% in June. As a result, national home values are now only 0.1% lower than a year ago. The market is picking up, and the worst of the downturn seems to be over. Buyer demand is also picking up, and with the available stock still critically low, more properties are selling above the asking price than at the beginning of the year. This is helping to support home values. When a property sells below the first advertised price, it is referred to as vendor discounting, and it's one of the many measures used to gauge the health of the property market. In June, the share of properties that sold for less than the asking price decreased compared to the start of the year. There has also been an increase in the share of sales over asking price and an increase in the share of sales at the asking price. So if this trend continues, home values will continue to rise. 5 of the 6 regions that make up the Perth Metro have the highest percentage of sales going for more than the asking price. The other 5 regions in the top 10 are all in Queensland and South Australia, mostly the Brisbane areas. 6 of the top 10 regional areas with the largest proportion of sales below the asking price are in New South Wales. Despite fewer properties for sale during the winter months, auction clearance rates are still very strong and sales volumes are higher than in the latter part of 22. There may be further interest rate rises, but after 12 increases since May last year, the end is likely in sight. Market expectations are for a further 1 or 2 interest rate increases. With this combination of high demand, low listing volumes, the number of properties selling for less than the asking price will drop further, driving up home prices in the near term. Australia's 2.2 million real estate investors have been under fire lately for quite a long time. But those who liken all landlords to the devil should be really careful what they wish for. Lumping landlords all together is just like saying that every renter is a tenant from hell who smashes in walls. Australia is experiencing a housing crisis, and a blanket rent freeze is not the answer. The majority of landlords are trying to do the right thing, covering the rising cost of servicing their loans, but also fostering long-term tenancy agreements. Some have even reduced rent or gone beyond to support tenants during the pandemic. Now, the Greens have recently called for a 2-year emergency rent freeze. The Greens' proposal would be disastrous for tenants and investors if they cannot keep up with their large mortgages. It leads to fewer properties available for rent, which drives up prices. It's what we're experiencing now. Good landlords with a heart should be praised over those trying to get rich quick. Private landlords provide the bulk of the rental market, and discouraging them from purchasing investment properties and removing stock from the rental market is not the answer. Adelaide's property market has outperformed all others over the past few years, and South Australia's regional markets are currently leading the nation for price growth. According to CoreLogic, national house prices are 14.8% higher in March 23 than they were in March 2020, at the start of the pandemic, you might remember, with Adelaide being the strongest performer since the pandemic. Over the past 3 years, houses in Adelaide have topped charts across Australia's capital cities to be sitting at 44% higher now than at the end of March 2020. PropTrack reports that Adelaide recorded further price growth in June, with prices up 5.3% compared to the same time a year ago. The median house values across Adelaide has increased by a whopping $211,000, which is much stronger than Sydney, where house values have gained an extra $119,000. The growth of the Adelaide property market has been an inevitable courtesy of a huge infrastructure spend affordability factors, high rental yields and low vacancy rates. On the ground, where we are, demand for property in Adelaide has never been so strong, with many homes continually selling above their listed price, way above their listed price. Open homes are attracting upwards of 100 groups through, and days on market is shrinking. This demand is coming from locals, interstate and international buyers, which is further pushing values up. Top performing Greater Adelaide suburbs include the northern suburbs within the city of Playford, including Elizabeth, which has recorded a 12-month growth rate of 11.5%, Gawler at 9.3% and the city of Salisbury at 7%. These are all suburbs with a median house price under $542,000. Now, according to Domain, Australia's housing market will be in a well-established, steady recovery over the 23-24 financial year. House prices in Sydney, Adelaide, Perth, and unit prices in Brisbane, Adelaide, and Hobart could have fully recovered from the 2022 downturn by the end of the next financial year. Adelaide and Perth house prices are predicted to rise slowly and may avoid any downturn altogether. But they might see a period of modest sideways growth, for which Adelaide, of course, is renowned, but not in the last 3 years, if you listen to the last news item. In the Domain forecast report for that 23-24 financial year, researchers identified 4 major reasons why there is upward pressures on real estate prices. So much so that the once cooling market will reignite again to record high prices in 5 capital cities over the next 12 months. Supply. Fewer listings have been keeping prices up. The current listing volume is 11% lower than the 5-year average for the combined capital cities. Domain found in the report that this signals rising competition, of course, between buyers, helping to stabilise or improve prices in certain markets. Population. Since the COVID-induced border closures ended, international students, skilled and temporary visa holders and working holiday makers have come back to Australia in force. Vendors thinking about listing are holding off due to lack of economic confidence. The very taut rental market means that although skilled migrants and students usually lease a property when they arrive, some might actually be making the move into buying due to the lack of other options, the Domain report said. Over the next 2 financial years, Domain analysis predicts that we will need 300,000 houses to cater for those new residents alone. Construction. The increased construction of building a house could eventually flow into the housing market, Domain has found. The industry will recover at some point, of course, after a period during which it will get worse. Numerous recent collapses of building companies nationwide indicates that the problem has some heat left. And then we have buyer borrowing power. The banks are lending less to borrowers to buy a property as their incomes and assets don't match what it requires to service the loan at these higher interest rates. Borrowers may not be able to buy the property that they want, but instead they take what firepower that they do have to find the affordable end of the market, increasing demand for those lower priced properties. This in turn creates competition within the lower price brackets. It also adds to the lack of rental supply issue, as some borrowers are unable to purchase the investment property at all. I will keep you posted on all things property from around Australia, as always, as our year progresses. Can you believe it's mid-July? Don't forget to subscribe and like if you are enjoying all the free content, and I will see you soon. Bye.